Welcome to the Tricord Advisors podcast. This is where we answer your questions to help you get excited about your finances. This is Randy Barkley, and I'm Jeremiah Lee. We're both certified financial planners, and I'm also a California licensed attorney.
So we just got through talking about required minimum distributions and what the Secure Act did. Now let's kind of transition to Social Security and Medicare.
Yeah.
Okay, this is exciting stuff.
Yeah, right. Well, we're trying to be a little bit excitement because things are changing in Social Security and Medicare.
Right.
Most people discount that and say, "Oh, that's for the future. That's for later." But once people get to these ages, it's a big deal, and kind of getting the right elections and the right selections.
Right.
What it is. So Social Security back in 1979, 1981 had some really big increases. We were experiencing hyperinflation. They got some big increases.
I wasn't on Social Security then, but I was alive.
Yes, right. You're there. But then since then, it's been minimal. They've been minimal adjustments. Well, right now, we're just the year 2023, we're having 8.7% cost of living adjustment, which is huge for Social Security. We've not had that type of increase in many, many years, decades even. So for a lot of folks, their checks are just getting bigger. And that reflects, you joke about, the price of eggs or all the gas was. I mean, those have been short-term spikes, but the longer-term inflation, the cost of living that we're experiencing, this is what this adjustment is for.
Right. So they're trying to make Social Security recipients their benefit to be adjusted to the cost of living adjustment. Now, again, this is only done once a year. So they do it through the year. So it's in your January. You might have experienced cost of living adjustments or increased prices on goods that you buy, last year prior to January. But the government does an analysis, and then on January, so then your payments. Now, again, they don't retract. We've never had deflation. I don't even, other than the Great Depression, I don't know if we've ever had deflation, and that was prior to Social Security.
Yeah.
We've always had inflation. That's one of the reasons why the government is always so concerned about deflation. They want to make sure it's kind of like the Goldilocks moment. We want to keep in a certain dollar amount. So about 2% has been seen like that mark of the benefit. And that's what the Federal Reserve is trying to get down to. But if you're a recipient, you're going to get the largest increase since the early 80s, late 70s, and it's 8.7%.
Yep.
That's a big jump in your Social Security benefit.
It's a big jump. And just part of the stuff we're looking at, the average benefit is $1,827.
Right.
Which, of course, everyone's is different. That's just the middle piece. But that comes out to about almost $22,000 a year. And so as people think about their retirement income, to say Social Security might be, on average, $22,000 of my future a year, and that's a meaningful piece, but it requires other pieces. And I think that's a lot of what we talk with our clients. Social Security is interesting and useful, but if it's all you have, it's going to be difficult.
That's not good.
Yeah.
But again, the other thing, the offset is that last year we actually had Medicare premiums exceeding what the cost of living adjustment was for Social Security, but they did an adjustment on that.
Yeah.
So actually, when they worked it out, your cost of living adjustment on Social Security is higher than your increase in Medicare premiums that you pay.
Yeah.
Now, most people, that your basic Medicare premium actually went down a little bit. It's down slightly from the $170.10 per month, and it dropped back down to $164. Whoopee, right? A few dollars. But there was a legitimate adjustment that you had more income from your Social Security to help offset some of these Medicare costs.
Yeah, and for someone who I think of, a little old grandma type thing who's struggling and just tied to the Social Security, these two together could feel like a really good benefit,
right?
A really good boost to what they're doing,
right?
The third part I just want to touch on is kind of the enrollment, and I've had a number of folks who I think they don't understand this fully or they weren't aware of it. Is the enrollment window? We had a client who got a notice not too long ago that said that their Social Security benefit was going to be changed if they did do something. And they thought, what is this? Well, it was their Medicare enrollment, to say if you don't enroll in Medicare during your enrollment window, then your Social Security
and there's a difference in age issue, right? So why don't you address the difference in age?
Yeah. So the window generally is 3 months before you turn 65 and then 3 months after. So it's a roughly 6-month period that you need to enroll. You can enroll early, you can enroll after.
And Medicare is at 65, folks.
65. That's the key. And it has not changed. All these different ages that we've talked about that change and adjust and shift, 65 is still the Medicare age.
And typically for Social Security, it's from as early as 62 and as late as 70. And a lot of people kind of interface Medicare and Social Security under the same age issues, but it's not. They're two different calculations.
And for most people, the full retirement age, for a lot of folks, the earliest you'd even want to take Social Security is actually 67. So even that doesn't align up anymore with what it is. So
with Medicare. Medicare is 65 because a lot of people say, "Well, I'm taking my Social Security. I should apply for Medicare."
So as you and the people around you have birthdays where they're turning 65,
right,
it's a moment to think about: have you enrolled? Have you enrolled in Social Security, or have you enrolled in Medicare? Have you received the best benefits for you? And we don't advise on this directly because there's so many good advisors that we work with that get into the weeds. I mean, we have one that will take your prescription list and go through all the medication that you're on or not on, and help you pick the exact best Medicare plan that's going to be the most cost effective.
Your Part D, right?
Yeah, and good for you. And those are levels of analysis that are so useful. But people who try and go this alone, it's hard to know. So having someone help you get signed up during that window right around your 65th birthday, I think is a fantastic way to do it.
And other things to point out is that these advisors that we point our clients to, they don't charge anything for this. And there's no commission, there's nothing. They get compensated, obviously, for the work they do from the providers, but they don't charge the client. So they're giving all this in their wealth of information, knowledge.
Yep.
They are literally immersed in all this all the time. For us, it would be a detail that we probably wouldn't do as well as they would.
Yeah,
right?
they can specialize it. And I think it's a great comment that you're not going to pay extra or lose some benefit by going through that. So there's, I think, the big changes that have come up. So you have a big increase in Social Security. Medicare Part B has gone down, and the enrollment, you still have to enroll. I guess that hasn't changed. But I think it's just a reminder that I've had a number of folks who are unclear of when and how they have to get in connect with Medicare.
And your Medicare premium that you pay is based upon your, as they call IRMA, which is really kind of a weird thing, but it's income related monthly adjustment amount. And so if I'm listening to somebody saying, well, I pay $164.90 for my Medicare, that kind of tells me what their income is, because that's between a certain level as far as your income requirements for that. But if somebody's saying, I don't pay that, I pay a lot more than that. Well, it's because their income from the previous year was adjusted higher. And Social Security can actually increase your cost for Medicare. And it actually goes up to, if your joint incomes are above $194,000, then your cost for Medicare could be as much as $395 per month. That's substantially greater than the $164 a month. So it's all based upon that previous, that IRMA, I guess.
And so when people start taking Medicare, it's a question of, are they still working? Right? If they're still working in well-paying jobs, it's going to be more expensive for a bit. And this isn't, if someone's making that kind of income, this probably isn't a meaningful shift.
And again, it comes down to tax planning also. For some clients, we've done this for tax planning. And we're not taking this space right now to talk about it, but this is where you can give qualified charitable deductions to reduce your IRMA. Your IRMA will actually reduce, and you end up paying a lesser Medicare premium.
It all fits together. And I think that's part of why we try to be holistic. Everything we do is to say it's not just, earlier segment, it's not just your trust. It's not just your beneficiary designations. And here it's not just the amount you make, it's all of it working together.
So if you've listened to our program today and you have questions, I really do encourage you to reach out to us. Either go to our website and go to the contact button. We'll reach out to you and schedule a time that we can talk to you. There's a lot of issues here, and it's a lot of detail. We can't cover them all in this particular section, segment of the program. So we encourage you to make the right steps so that we can help you make the smart decisions about your money.